Hello, hello. Today we have a lot of freestyle. I guess traffic in Bangkok is making us improvise. So me and Gokhan will now chat a little bit more about investment philosophy and current Ethereum landscape. I guess Gokhan has been on stage several times, so no need for him to introduce himself. I'll be quick. So my name is Momir. I've been with IOSG Ventures actually since early 2020. At the beginning, I was mostly focused on DeFi research and investment, but since 2021, started looking more into infrastructure, and today I'm pretty much a generalist, recently spending time in Bitcoin ecosystem, DeFi, crypto, and AI. So that's the brief intro. Maybe we can start with one of the fundamental questions. What is actually Ethereum? There is a lot of debate whether Ethereum is productive asset, whether Ethereum is currency, whether it is store of value. And I'm sure there are a few more narratives that are competing, but Gokhan, what is Ethereum?
Perfect. Yeah. So it's a tough question to answer, and I think maybe the way that people discuss this, and it might be relevant to like our audience as well. What makes Ethereum a bit more valuable? Let me start from there. Like historically, Ethereum's main revenue has been coming from transaction fees. Ethereum was making billions of dollars just in 2021. And the reason it was making those was basically there was a lot of congestion in the network and transaction fees were super high. And those fees were used to burn the Ethereum itself, the asset that would bring value back to it. Now that Ethereum is actually scaling, what's happening is that the transaction fees are going to almost zero, right? Probably in the long enough horizon, they should approach to zero, and the transaction fee revenue for Ethereum should not be something significant. And then I think Kyle was putting it there, any L1 token should be valued based on how much MEV value that they accrue. MEV is basically when you're making transactions on a chain, how do you order these transactions? By ordering them in different ways that you could actually make money out of these transactions. And then his argument is that this should be the main value, how all the L1s should make money. But then I think recently he started adjusting his position because Ethereum cutting edge research is showing us that MEV value, while some of them will go back to validators, actually majority of them are going to be consumed or extracted or paid back to users or the dApps themselves. You can see that in the Unichain that is just recently launching. Yes, there will be MEV, but it's going to go back to users and dApps, right? And Ethereum L1, Uniswap V4 hooks, they also enable a similar thing with the projects like Sorella Labs. So I think that also reduces the value that any L1 token actually can get from MEV itself. Maybe 10% of MEV still goes back to the validators themselves. And then the final value for any sort of L1 token, including Ethereum itself, is actually, is it being used in the ecosystem as value, as store of value, as you mentioned? Maybe it is staked, maybe it is used as a collateral in DeFi applications, maybe it is used as a money on OpenSeas and NFT trading platforms or meme platforms, etc. I think this is where it creates a lot of sync for that asset, and it starts becoming more like money in the minds of the people. And how do you reach out to that? Maybe that's another thing, but this is what I think. I think the only way any L1 token captures value is basically just focus on the third aspect of it. And it's not a straightforward path. It might be some social engineering. It might be creating a meme around it so that it's used on every layer of the stack. But I think that's the way moving forward for the Ethereum itself.
I think one of the mistakes of Ethereum community is that let's look into Bitcoin. Bitcoin is trying to look up. They are looking into gold as an asset that is much larger asset, and they are saying like we are much better than this asset. You have Solana. They are looking at Ethereum that is 3x market cap, and they are competing and comparing themselves against the Ethereum and saying like, okay, we are better than Ethereum. We should have like a 3x upside at least to kind of manifest that. We have Sui, they are like looking above, like they are looking into Solana and comparing themselves. And Ethereum, who is Ethereum comparing themselves against? It's too defensive. Ethereum community is always talking about, oh no, we are better than Solana. They are accepted to be in like in a defensible position, and they're not talking about like a bigger vision and who are they going to challenge, but more like taking step back and while like Solana is being aggressive. I'm not sure what would be the kind of best positioning for Ethereum. I have like a strong opinion that Ethereum shouldn't be positioned as a productive asset. I think that's has been one of the mistakes that we can see for DeFi protocols, because once everybody started considering these DeFi tokens as productive tokens that have sort of like a fundamentals, revenue accrual, and so on, their upside has been limited to actual fundamentals that they are generating. And if we look into Ethereum as a productive asset, it is not super interesting pitch, because it is trading maybe 100x of its multiple to the revenue fees that are being generated on Ethereum. So even from somebody who is now looking to buy ETF of Ethereum, if they're thinking about it as a productive asset, they are not going to see like a big opportunity. So I think that Ethereum should probably try to focus themselves on being like either currency or this global settlement layer, and then compare themselves as an alternative to something bigger. Like if their currency, then start talking about like why we are better than US dollar. If they're like a global settlement layer, then talk about some other bigger vision, but stop being defensive essentially compared to Solana.
I think that's a great point. If you look at Bitcoin, for example, right, these guys have been talking about Bitcoin becoming the most strong assets, let's say like a inflationary sort of prevention or like a hedge asset. They've been talking about this at least for 10 years now, right? They knew that the next step for them was to go to institutions and sell their token to them. And then they've been creating this narrative and positioning them in different positions just to take advantage of that. That's been the case. But for Ethereum, just like you said, I think even us didn't know what story to tell. And maybe that is also because Ethereum has gone through multiple important, significant upgrades to its network. Like a couple of years ago, we could say, hey, it is the same as Bitcoin, but more programmable. All of a sudden now you have L2s up there building, and they will have their own tokens. And then that goes back, okay, then what does ETH, the asset, do in this sort of a world? So that's sort of a mindset shift. I think even the Ethereum core community is just now realizing and trying to sort of polish their narrative, how to position it in this sort of a world. And it's not an easy one. Maybe we can talk about like ETH in relation to L2s versus like also another thing like L2s being parasitic to ETH as an asset, all its value capture. I think this is like one of the main arguments that people are making recently. And I agree. There was one article from the Ethereum Foundation, Mike, I think Nuder, has written this. And he was arguing that since ETH, the asset, is the native token of the L1 itself, and it will be the only layer where you're going to have this permissionless censorship-resistant properties of your asset, and it will be the glue between all these different L2s that are building on Ethereum. So this is the reason basically why you should have some Ethereum value or the moneyness as the most strongest asset in this ecosystem. I think this is the best narrative that we can come up so far, but it's not an easy narrative that you can go and talk to a lot of people as well. So there are problems with that too. What do you think about that
I think
aspect?
if there is like a power law distribution for rollups and like strong network effects such that Base, Arbitrum, or some other rollup start like attracting a lot of the ecosystem participants on their chain, and that we start seeing something like native assets of Base that are not actually listed on L1 at all, that start existing from day one on Base. I'm not sure how does that impact this sort of vision, because like one of the principles you mentioned in the presentation that Vitalik talks about is that Ethereum would be the asset where each L2 can always, users of L2 can always exit to, right? But if something doesn't even exist on Ethereum, what happens then? So I think there is like also that sort of potential risk, but I think this might be a little bit technical, too technical of an issue to discuss today. Maybe we can also talk about like Solana versus Ethereum more general, like whether how to kind of assess the opportunities within these two ecosystems. Are Solana ecosystem projects investable? How does a fund that was exposed to Ethereum mostly for the past 5 years observes the opportunities in the Solana ecosystem? Do you want to start?
Sure, or maybe you start this one. Like,
I think that for Solana, like the best thing that happened to them was that FTX failed 2 years ago. On the one hand, it drove them down to like below $15 and created the opportunity for new entrants to build their position and have like a 10x upside opportunity. And on the other hand, it kind of created much more organic ecosystem without one central actor dictating the dynamics, without SBF coins and without this sort of like tendencies. And then when you look into these early entrants into Solana ecosystem, once they made 10x on their position, they were starting to look for like more up on the risk ladder, like new opportunities where to allocate some of these profits, and they started to play with this meme coin narrative, and they created like all these meme coin hype. So if there was no FTX bankruptcy that impacted at that point of time like very badly whole Solana ecosystem, we wouldn't have today meme coin craze on Solana and like a huge amount of volume. But I think like fundamentally speaking, like beyond these meme coin trends, I think there are also some good signals that Solana is much more mature than it used to be before, and it's much more legitimate contender. I think it's first time ever we see that one new vertical is being innovated and shaped outside of Ethereum ecosystem. I think we see that with Deepin. Until now, every innovation started in Ethereum, and then other ecosystems copied it, from DeFi, NFTs, social primitive, gaming, everything started on Ethereum, and then we had like Ethereum DeFi copy on Near, on Avalanche, on Solana. But this time around, we have like this whole new vertical that is very interesting, that is finding its own hub on Solana, Deepin, right? So there are like many new interesting angles. And I think when it comes to these opportunities, VCs shouldn't be dogmatic, but mostly observe each project based on its use cases. I think that both ecosystems have like are in mature stage. Obviously, Ethereum, for many reasons, I think it's still the leader. It's still the most trusted blockchain. It still has the most sustainable scalability roadmap. But Solana got very active developer community that is unique in a sense that they have like different ideas and they innovate around different concepts. So I think that VCs in general shouldn't be dogmatic, but focus on new use cases in innovation. And today we can see them both in Ethereum and Solana ecosystem.
Yeah, I think like a couple of things from my side as well is definitely, I think it was the beginning of this year, right, where we started projects coming to us, and then most of the good ones, or like some of the good ones, started building on Solana, and that was our realization. Okay, now the good developers are actually building on Solana ecosystem, and VCs and many of the other users and liquidity, everything actually, it follows the developers rather than anything else. So maybe that was a strong signal for us to take a look at Solana ecosystem, and we were very much impressed by the Deepin ecosystem that is emerging there. My thesis is that I think anything that is happening on Solana in another scenario could happen on Ethereum L2s. It's just many of these L2s have given it a try, but then they still had these like transaction fees going out to $20, $30, or let's say having some other problems as well. I think the core piece of any blockchain is you should enable people to have these low transaction fee and then high volume of transactions overall. This just didn't happen on Ethereum L2s. In a world where maybe we had these scaling solutions a year earlier, I think we could be looking at a different trajectory path for the L2s now. But now they have it. We'll see if they can actually execute and hustle and get the developer mind share back. But this is something we will all see this year.
I think another thing besides like these fundamental technical questions is that in crypto it all starts with speculation, and like these alternatives, L2s on Ethereum, they also have to make the community rich first and then like start to have like a little bit more lively ecosystem. We saw what happened when Solana went from $10 to $200. We saw what happened before with Ethereum when it grew to 100 billion plus market cap. So far, we didn't have like this effect with L2s. Often we have this problem, like for instance, Base is not going to launch token at all, right? But it still has very good ecosystem. There is still like missing this speculative component. Some other L2s started with low float tokens and are now in the problem of being down only since launch. So the community is generally not happy with which
thing. But that it's a bit more than the traditional, and then Series A earlier access than the meme coins that like they access much earlier than the rest of the community. But I think the value coming out of meme coins is basically how do you distribute your token to community at an early stage without extending this whole process. And what makes memes, I think, a bit more interesting is that basically within the context of AI agents as well. Like recently, the GOAT, everybody knows about it, obviously. An agent owning a token and issuing a token and distributing it to community through meme coins. I don't see that happening through a VC fundraising or private fundraising. Maybe in that case specifically, it makes a bit more sense that they go with the meme token route. But then I think memes and even some VC coins obviously have a lot of problems with the low float and then token supply and how they distribute the community. But maybe you can tell more about that too.
I think when we look into this narrative, like and community positioning VC tokens against meme coins, it appears like as if community is unfair towards VC coins, doesn't want to play them and so on. But actually, I don't think that's the case. I think that crypto VCs still enjoy some of this crypto premium when their projects are traded at much higher valuation than maybe fundamentals deserve. And I think there was never the case where we actually had product that has product market fit, good traction, good user base, good volume, and that didn't get recognition or liquidity from the market. So I think whenever we have like a product with product market fit, nobody cares whether it's a VC token or not, right? Like today, if Pump.Fun issues token, it's like an open sea of this cycle. They control this like meme coin narrative and so on. Nobody would be asking like, oh, what's the percentage ownership of Alliance DAO in this project? Because this project has actual value and users, and there is something happening that could kind of defend this value in the market. So I think that the big problem for VCs is that there has been a lot of things that has been funded that doesn't have product market fit, but still wants to kind of issue the token, and then everybody starts complaining about why this token doesn't have much liquidity or demand from retail. Well, usually it's the case that there is no product market fit, right? So I don't think that the market is unfair to VCs, and the reason that there is like a less innovation is probably also the reason why market in a situation where Bitcoin is breaking all-time highs, looking for higher risk bets to make, and then if there are no innovation like we had in last cycle, DeFi and NFTs, then market will always go back to meme coins. But I think that in general, this like meme coin trend is something that's very bad dynamic, mostly for centralized exchanges, because they're missing out more than VCs are missing out, in a sense that centralized exchanges are not able to list many of these meme coins early enough to make their user happy, and they cannot, even if they list them, they are going to be blamed if the meme coin fails, if user get money. And once they don't list them, they are losing users who are leaving to trade directly on Solana. So they're like in a situation, damn if you do it, damn if you don't. So it's a very challenging environment for exchanges as well. And it is something that needs to be kind of addressed with more innovation. But I think that the low float dynamics is something where exchanges and VCs are stabbing themselves in the back, and to some extent also contributes to this issue, and to some extent contributes to the issue of we still didn't have like a proper wealth effect with L2s because they all start with very low float. So I think this is like something that needs to be redesigned from ground up. I think that this is hurting the industry in many ways, and industry main participants from investors to exchanges, and it doesn't allow projects themselves to succeed because they cannot build wealth effect for the community. So how to resolve this problem? I think that's a more complicated question, but there are essentially two ways you can resolve low float, right? Like you either make insiders liquid much earlier, or you make airdrops much larger so that you have like community distribution happening much sooner, bigger chunk. I think both approaches have their own issue. Like when it comes to the second one, making airdrops harder, I think it's super risky from projects to go in the market and airdrop like 50% of the tokens, because that essentially means like overspending on marketing and overspending on scaling before you find like a product market fit. Like if you fuck up, like you essentially don't get the second shot. If you distribute too many tokens, there is no way to pivot, right? So unless the product is a little bit more mature and the product market fit is already clear, I think it doesn't make sense to be that aggressive. Then on the insiders part, there is also issue, right? If we unlock the team, then how they remain committed. And I feel like that most rational way is to unlock investors much earlier. I think we have examples like of a project that we invested 4 years ago that are only now in a stage where they are a little bit more mature to launch token. So I don't understand why there is like a requirement that we have to be locked for 4 more years to kind of like once you already walk the journey of 4 years to come to the point that the project is ready.
How do you think unlocking the investors is going to help in this case? Because you're still going to keep the investors responsible by just reputational terms, right? Like they.
I think you have to increase the supply of token, and like somebody needs to sell in the market, right? If nobody is willing to, if there is no sell side, then you end up with a huge FDV and down only charge for the next 3 years, right? And if you have the selling side, you come a little bit closer to the real market price, right? And then even for VCs, it doesn't necessarily mean that the VCs would sell. Like you have examples of, let's say, Pendle. They launched at maybe like 50 million FDV. They dropped to 15. I think most of VCs exited maybe in 50 to 100 million, and then Pendle went to 1.5 billion, right? Like it's not necessarily in the best interest of VCs, but then you should if people are not confident about the project, there must be some internal reason for it, like this to reflect also on the price, or if they're like not diamond hands or don't have trust, they should also not be forced to enjoy the upside, right? Like if you don't want to hold it and take this additional risk, you should also not enjoy the upside of the project. So I think that there is a need, like when you do IPO, right, in traditional market, like it's an event where investors are liquid, right? Like you can choose because there is like actually product that is mature, that has some fundamental value that market would find a reason to trade it beyond just narrative and mind share.
Yeah, I think, yeah, true. Probably the main problem is that with the crypto is always, the retail is so much involved from day one that there are some rules that you put out there to protect the retail that also distorts maybe the institutional side of things. If you look at IPO, for example, IPOs, it's only a couple of companies, right? They managed to reach to that state. Versus in the crypto case, it's just from day one, you can have it and retail start buying and selling it. So if you want to protect them, then you have to introduce some rules that might not make sense in the institutional sense. Like this is I think our whole struggle when it comes to token design. But the main problem is probably, like, it's been how many years that since 2017 and even earlier, we've been issuing tokens in the market. And if we start thinking about what are the best practices, I think we go and ask even the 10 projects in the space that have launched token, I think we would hear 10 different answers in terms of how to manage this whole process. From the token allocation all the way to how do you distribute your community, how do you incentivize them, etc. It's been impossible to come up with best practice. And I think this is what we're, why we are suffering so much. Yeah.
But I think that the consequence of this good intention to protect retail was actually also to hurt retail. Exchanges force these lock-in schedule, and then you have all the L2s launch at 20 billion FDV and be down only since launch, right? So you basically make it such that who comes early, who shows early trust into the project or just want to speculate from early days is punished the hardest, right? If they come early and hold, they would essentially come at a super large FDV. So you have good intentions, but the unintended consequence is that you hurt the retail, you hurt the project because it cannot have a wealth generation sort of effect for the community. And at the end of the day, nobody benefits. The exchange is also hurt because their users are pissed off. The volume is not as great as if there is actually the vice versa effect. So nobody benefits. So I think that low float, one way or another, shouldn't be the practice. I think, right, if the project is already a little bit more mature, and it should be listed on exchange, right? But then if it's already mature enough to be listed on exchange, then there is no reason to lock everybody. That means that there has been years of effort. There is a strong product, solid community. You launch on exchange, why then enforcing these additional requirements, right? If project is not mature, then don't list it on exchange, and there is no need to discuss whether this should be low float or whatever sort of distribution dynamics.
Yeah, I think our time is up, right? Yeah, thanks a lot, Momir.
Thanks, Gokhan.